So good morning, everyone. And after that exciting talk from Victoria, I hope the Kodiaks is now rushing through your veins. And the caffeine is also hit, and you're all wide awake, because I'm going to tell you some really interesting things about, as Philip mentioned, the new gold rush that is coming, and how we, especially as technologists, data scientists, and engineers, are in the pole position to really benefit from this. And hopefully along the way, I can share with you some of the interesting technical challenges we faced along the way and how we went about solving them, or are still trying to figure out how to solve some of them. So this is what the gold rush looked like back in the 1800s. You were out somewhere in the nature, probably somewhere in California or Alaska. Very good chance of getting killed by a bear or some disease. And maybe if you were lucky, you had good tools, a nice spade, some other things. You found a nugget or two. So it wasn't really as great a rush as it sounds like. Thankfully, things have changed now, and this is what gold mining looks like today. I guess a picture of a person sitting in front of a spider notebook as a data scientist just doesn't sell as well. But the way it looks today, there's still a good chance you're probably in California. You're sitting in a comfortable chair. There's no bears, only a few bugs in your code here and there. And the spades and the tools, which are your libraries and algorithms, are getting better every week. The current gold rush, of course, that I'm talking about is the one that probably a lot of us are involved in, and if not, we've at least heard of it. It's that of data and AI. Now, the thing about this gold rush is often just having the right tools and approaches is not enough. As Philip mentioned earlier, the academia is coming up with more and more algorithms every week. The approaches are getting better. But we still need the ore, which is the data. And we need to come up with the right use cases to actually extract the gold from this ore. So today I'm going to talk to you about one very new, very exciting data source, tell you a bit about a few exciting use cases, and then, like I said, share with you some of the challenges we faced in the journey of getting to that gold. But before I beat this metaphor to death, let me tell you a little bit about our awesome company. What do we actually do at OptioPay Group? Basically, we give people free money. It's a great business model. I don't recommend it to anyone. Well, okay, if I had only 1 second to summarize it, this isn't completely wrong, but let's dig in a bit deeper. So we're basically a fintech company based out of Berlin, founded in 2015, that's focused on providing an optimized customer experience in the moment when a person receives money. We started out with what we call the payment solution, which is basically we work together with companies like insurances, utilities, e-commerce companies, and help them digitize their payout process and enhance it. So let's take an example. It's pretty simple. Say you have a bike and you have bike insurance. Your bike gets stolen. Your insurance company wants to pay you 300 euros for your premium payout. Instead of getting it as you would have in the past as a check or maybe a bank transfer, if your insurance company is working with OptioPay, you're now going to get it through our platform, which means that you can choose to convert some or all of it into a higher value voucher, ideally for a bike shop, but we have a large range of online and offline stores on there. So if you wanted to, you could even convert it into a Zalando voucher. In this example, and this is a real example, we can offer a 10% upside at Zalando. So you're converting at 300 euros into 330 euros that you can spend at Zalando. This is really exciting for all people involved. For the insurance provider, it's a way to improve customer satisfaction. For the advertiser, in this case Zalando, it's a way to acquire a new customer in a moment when they're more likely to spend money because they're receiving money. And for us, we get a commission from the advertiser, and we get a fee from the issuer, the insurance company in this example. We had this product, and it's doing really well, and we said, what if we could actually sell something to you every time you receive money? So not just when an insurance company is paying you money or when you're getting a refund from your utility, but anytime you receive money. Whether it's your Christmas gift from your grandmom, you're getting a rental income, you're getting a tax refund, whatever it is. I mean, that would be pretty great, right? But the challenge is obviously we don't really know usually when people receive money. You can make some guesses, end of the month with the salary and so on and so forth, but there's really no good deterministic way to find out. Well, that's actually the good news. There's a very exciting new regulation from the European Union called PSD2, which came in at the beginning of the year. The rest of my presentation is a lot of slides like this, so I hope you guys are awake. No, I'm kidding. To be precise, that's the name of this regulation, but in simple words for normal people, what PSD2 does is basically, it's a set of regulations that kicked in at the beginning of 2018 that forces banks to let customers decide what happens with their data. So now you as a customer have the power to decide to give access through an API to your banking data, your transactions, to any third party of your choice. So this could be fintech platforms, apps, and services, anyone who you think is going to add value to your life by using that data. So this comes from the general idea of what's called open banking, which is part of the open data sort of realm of ideas, where governments, and especially the EU, are trying to make more data available to people and putting the control of how this is shared and consumed back into the hands of the person who's actually creating the data, so the end user. And in practical terms, this now means that all banks in the EU, since 2016, have been forced to start setting up APIs that lets users give access to this data. Now, as you can imagine, this leads to a large number of very interesting use cases through all this massive amounts of data that's suddenly becoming available. How much data are we talking about? So again, every country in the EU has to do this. In 2016, there were 122 billion transactions that were processed by banks in the entire year. So, ladies and gentlemen, this is certified huge. Now, some of you are probably thinking of all the different exciting things you can do with this. And that's a big part of what I want to talk to you about today. But I wouldn't be doing justice if I didn't tell you a bit about how we're actually using this data at OptioPay Group. So, coming back to the original question we had, which was, how do we actually sell you something or give you a way to improve your life every time you receive money? The challenge was, we don't know when you receive money. Thanks to PSD2, we can now find out when you receive money. Not only can we know when you're getting an incoming transfer, but we also, through your banking data, know where you like to spend your money, what you like to buy, how you save, how much money you make, so on and so forth. So we can actually use that to make it more personalized and relevant to you in terms of what we offer. So that's when we started up with Account Solution, as we call it, which is our new product since the beginning of 2018. So this is a B2B2C product. It's a white label platform that we offer to banks. Users can sign up, provide us their credentials, and we pull in their banking data, and every time they get an incoming transaction above €5, they get an offer from us, which they can convert into vouchers coming from our traditional background, but also a much broader range of products that we're now starting to offer, which are physical products, cryptocurrencies. You can donate to charity, or even invest in other financial products, always getting an upside on the money you receive. Now, this is a really interesting business model because the banks that we work with our white label solution are actually struggling really hard in the face of the challenge from digital banks like Monzo or Revolut or N26. And they're looking for ways to retain and actually, engage their customers more. They're not allowed to actually use the data themselves the way we can because their account holders haven't explicitly given them permission. And this is not even their core strength. They're not good at digital. Traditional banks suck at digital. We can do this for them. So our platform basically uses the user transactions, uses their spending and income data, and provides them, based on our understanding of their needs and preferences, with a really broad range of context-specific, higher-value payout options. So you can take that money and get something better out of it. Now, taking this back a bit more into the technical direction, doing this, of course, requires solving a whole bunch of actually very exciting and interesting learning, information extraction, and prediction problems. And this is where our third new product, Opto Brain, comes in, which is what they hired me to do. Now, Opto Brain is basically how we're trying to get to the goal, right? Think of it as an AI engine of sorts, which we're currently prototyping and partially using in production. Opto Brain takes this transaction data, categorizes it, extracts information, tags the transactions from the transactional data, and then uses that to understand user consumption patterns and behavior. So basically, it takes us from raw transaction data to the insight of what do I offer to which user at what time. It's broken up into essentially 5 broad steps. Extraction and tagging is really where a lot of the heavy lifting happens, and you'll see why in a minute. But this is basically where we're trying to figure out what type of transaction was this? Was this an incoming transaction, outgoing transaction? Was it from a merchant, from the government? Was it a salary incoming? What category is it? Is this food? Is this fashion? Is it rental? So on and so forth. And, who processed it? Was this processed by MasterCard, Visa, PayPal, so on and so forth? Gives us a lot of interesting information about the user. Now, this information on its own can be used for a lot of interesting use cases, but our value comes from actually summarizing it and creating what we call a user persona. So we combine the user transactions, combine their data from across our platform, and come up with a 360-degree view of what the user does. What vouchers and products are they buying with us? What are they buying in their real life? And how often are they doing any of this? And what this allows us to do is essentially what's called propensity modeling. So we're able to generate a score for each user for every product we have on our platform that tells us how likely are they to buy it, how likely are they to need something different, and so on and so forth. Once we've scored our users for all these things, we can start recommending things to them. So every time they now get an incoming transaction, the platform kicks in based on the size of the incoming transaction, where it's coming from, and the timing of it. It chooses what's the right offer to make to the person. So if I'm getting my salary at the end of the month, you probably want to offer me a larger product, something more interesting than if I'm getting $10 from a friend who's paying me back for the pizza that I lent him last week. And that's where the context really comes into play. So early tests have been very, very compelling. We've been able to improve conversion on the platform more than 200%, where conversion is basically people getting an offer and using that to actually buy something from us. But this all sounds really great, and as I mentioned a bit earlier, there's a lot of heavy lifting we need to do on the extraction and tagging of this data. The reason for this is you have to keep in mind PSD2 was forced onto the banks. No bank chose to do this because it takes a lot of power away from them. And the directive doesn't really say what format or what minimum requirements are actually there in terms of how clean the data needs to be. So let's take a look at what that data looks like. Dirty. That is actual transaction data that comes through a banking API. Now, if you think of this from a machine learning perspective, in order to extract value from this data, we'd like to do a few things. We'd like to understand, how much money is being moved, when is it happening, and who is it coming from or going to. Fortunately, some of the information, like the size of the transaction, the timing, that stuff we actually get a separate field, so that's the good news. The bad news is the purpose field, which is actually where all the interesting stuff is, makes no sense, right? So even for a human being, this is completely nonsensical. And that's really where the value is, because we want to know which merchants are spending at, which categories, and so on and so forth. So what we would essentially like to do is solve a multi-classification, multi-labeling problem on these transactions. Understand this is a transaction for Amazon, it came because of a refund, or this is a salary from an employer, and so on and so forth. A lot of the classical approaches you would use in NLP to extract information, do topic modeling, so on and so forth, don't really work as advertised on this data. I mean, just look at this. It's not human readable most of the time. It's not structured. There are no labels. It's quite sparse, so you may only have one transaction from a certain merchant across your entire corpus, and the range of potential labels is pretty huge, right? It is finite, but it's huge. Alone in Germany, which is where we have most of our customer base right now, there are over 4 million transactions. And honestly, this isn't what I would consider a natural language either. It's not all bad news, though. We did manage to getting a pretty good coverage for extracting information and tagging this data, using a couple of interesting approaches that combine, let's say, more brute force manual work with a little bit more learning-based classification. So what we really need to do to start with is label this data. Like I said, the labeling space, while huge, is still finite, so that makes our life a bit easier. There are lists out there of existing merchants within countries that we can use to start looking for pattern matches. So if the word Amazon is in the transaction, pretty strong likelihood that this was a transaction at Amazon, the website. And there are some predefined lists of merchants and patterns they use in transaction codes. But of course, we had to, extend that a little bit by also using manual data labeling, so something like Mechanical Turk. Life cannot be that straightforward, though, because due to EU regulation, we can't use Amazon for this kind of work. So we had to resort to other alternatives, but essentially following the same notion of Mechanical Turk using crowdsourcing labeling. And then when we have some amount of label data, we're able to move more into the domain of NLP. So there was a really interesting workshop yesterday on this topic where, using named entity recognition to find potentially interesting entities or words in those transactions, and then using some amount of fuzzy matching against merchant lists, against known entity lists, to try and identify which transaction this is, especially when we didn't catch them with pattern matching. And then what we'd now like to try, now that we have better label data and are able to tag transactions already a bit better, is go down the deep learning route, looking at recurring neural networks, long short-term memory-based networks, and see if we're able to improve classification, efficiency, and coverage with that. But we're still in a good place with this. We're getting to a good 50 to 60% coverage. Now you have to keep in mind, we're not trying to do a deterministic thing where we have to know who every transaction was for. Knowing that for a fair number of transactions, for a fair number of users, is enough to make good predictions, segment the users, and start making recommendations. Now, coming back to where we all started, right? We start with the promise of gold. And even though I'm not a Lannister, I will pay my debts. And talk you through some interesting use cases that rely on the application of AI technology and the data, and have data at the core of their business model, essentially. So starting with targeting and personalization, this is what we do, right? We're using this transaction data to figure out what we should give you, what would you like to have, better than anyone else can right now. But coming to the more interesting ones, and going back to what Philip mentioned earlier, this is a tech conference, but I hope what we can take away from this is, as technologists, we have the opportunity with this data to do some really interesting things. Some are already happening. Personal finance management, there are tools out there that use this API data and tell you as an individual user, how are you spending your money, which categories are you spending more on, how are you staying within your budget, how could you optimize that, and so on and so forth. Interesting use case, not that much of an application of AI as such, more just summarizing that data, but lots of value to be made. Robo Advisors, there's a lot of investment advisors out there, Robo Advisors, that are based more purely on market trends. Understanding users' transactional and spending behavior adds a whole new dimension into what you actually offer them as investment products. Credit scoring. Most credit scoring today works in a negative way, which means if you took a loan, if you had a subscription for some sort of monthly service, if you had a mobile contract and you didn't pay on time, your score starts getting deducted. The problem with most of these scores is they basically paint a picture that's quite limited. You could have people who don't have a huge income but are very prudent with their spending, and you probably are more likely to want to give them a loan than someone who's making a lot of money but spending it, within the first week of receiving it. So this takes a whole new spin on credit scoring because it actually allows you to score people's credit worthiness, not only on their credit history but also on their spending behavior. Contract switching, very exciting use case. Utility providers, mobile phone companies, what have you, will pay you a lot of money when you acquire them a customer. So if you're able to see people's spending patterns for their electricity bill, their gas bill, so on and so forth, and convince them to move to another provider because there's value in it for them in terms of cost savings, in terms of better service, whatever you have it, there's money to be made on every person you switch over. There's satisfaction for the customer because they save money. Same thing with loans. A lot of people have loans spread out across different providers. This data is clearly visible inside these transactions. If you're able to find a way to optimize that, consolidate loans, save money for people, there's money to be made there. There's gold to be made there. So this brings us slowly to the end because I want to save some time for questions. But the main message I wanted to give you guys is, as data scientists, as AI people, as technologists, we're always looking for data. There's the academic data sets out there. They're great, but there's then the real-world data, and more of it is starting to become accessible. In most cases, businesses are using AI and ML to optimize their existing processes, But there's a whole range of business models out there waiting to be built that are actually built purely data-driven, bottom-up. And we, as technologists, are at the forefront of the opportunity to do so. What you also need to take away is people are actually willing to share this data with you if you provide them with enough value. So if you're able to convince people, and we've shown this with our product, that sharing their data with you actually makes their life better and not just tracks them in some creepy way and shows them fake news, there's the opportunity to get that data and to do interesting things with it. But this involves using the right tools, facing a bunch of challenges, coming up with the right approaches and interesting use cases, and always keeping the user at the center of it. So I hope that next time at Kodiak's or even at Techsylvania already next year, we see some really exciting data-driven products coming out of this audience, out of Romania, for the Romanian market, but also for the entire EU or the world. Go out, start prospecting, and ask me any questions you might have.
Okay. So, before we go to audience questions, I also have a question for you.
Sure.
One of the things that I always find fascinating is like the structure of the AI teams. So because like, do you have people like tagging the data? So I would be really keen on like, how do you structure your team? It's okay. So how do you structure your team and like, how is it consistent? Is it like, how many engineers, how many QA people? Because it's very different in my experience from traditional like engineering teams when you just build software. So can you talk a little bit about the structure of the team that you've set up?
Absolutely. So we're actually a pretty small team right now. It's a mix of data engineers, data scientists, and a lot of the QA labeling kind of work, we actually outsource it, simply because we're not at the scale yet to merit doing it in-house. The frequency of when that kind of work happens varies quite a bit, so you don't actually want to build out all that capacity in-house and spend all that money in advance. What's, like you said, interesting is that this is different from a normal technology team. So we can't really always work in the same agile sprints that you'd work when you're building a more vanilla product. It's a bit more research-driven, so a lot of it is coming with impulses from the data scientists. When we come up with a new approach, a new model, we're sort of taking a gating moment where we're trying to decide, is this something we can scale yet? Is this something we're confident enough in to push over to engineering and actually productize? Or do we want to run this more as a manual, more hands-on approach at this point of time? So I would like to say there's a perfect solution, but actually there isn't. And in my previous life, doing this as a consultant for other companies, there's completely different setups based on needs. There's companies that have a very clear use case, they have a very clear set of data, and there it's really about scaling as quickly as you can. So you're looking at maybe few data scientists and mostly engineers. We're at a stage where it's more research-driven, so we're really putting our investment on the research side, on the data science side.
Okay, very interesting. Okay, do we have questions from the audience? Exactly, just about a second, there's a microphone coming.
You just explained that the data that you have are so complex that the human cannot understand or completely follow. How can you manually label at the end?
Well, fortunately, not each and every transaction is that bad. There's quite a few in there that are just really hard to read for human beings, but generally there is enough clues in there that you can figure it out. What works really well is often Googling a transaction string. Works really well. So the way we set up our labeling flow for our labelers is we've tagged data with a low confidence using the matching, and then they're taking those strings and trying to label them with what they can figure out. And if they can't, they're searching for those little bits of information in Google, because often you'll find essentially a reference to some merchant in that. It's something we're still figuring out as we go. There's no perfect way to it.
If you try unsupervised learning directly,
Sorry,
unsupervised learning.
Yes, because we don't have label data, or we're trying to create label data at this point of time. Yeah, exactly.
Okay, other questions in the audience? We have two more over there. We have a microphone over there. On the right side. Oh, well, over there more, okay. Here.
Just yell it out. Someone?
Now it is, should be.
Okay. So my question is about how you actually get the data. So if you came to me and told me that to give you access to all my transactions, I would say hell no. So how do you actually convince people that they should give you that access?
People like free money. And effectively, the value proposition is we're giving you a chance to increase your money every time you get an incoming transaction. And of course, there's always going to be people who are more privacy sensitive and don't want to share that. And then there's people who are less privacy sensitive and are fine with that. If you take a step back and think about it, all that information is already out there and being used in some form or the other. When you're buying at the supermarket and you're using a loyalty card for points, you're sending that information somewhere. When you're paying with a credit card, MasterCard and Visa are basically selling that data to advertisers already. So I think for a lot of people, it's also just realizing my data is out there anyways. At least now I'm getting paid for sharing it. And I think that's a pretty convincing value proposition for a lot of people.
And with that law, you basically, do you get, with those APIs, does the user actually have to give you specific consent, or the bank just, it hands the data to whoever wants to access that API?
No, not at all. So each user has to actually authorize access by entering their credentials, and that's then securely verified with the bank and so on and so forth. Yeah.
Okay, thank you.
And they also have control over what kind of access they provide. So you have account information service providers, which are basically companies that are allowed to essentially read that data for the information. And you have payment service providers that are actually allowed to even execute transactions on your behalf. That's more complicated, a lot more regulation, a lot more hurdles you have to get through to get permission to be that kind of a provider. Account information service provider, comparatively easier. I say comparatively, this is still EU bureaucracy. So.
Hello. Do you have any plans to make the Opto Brain available through an API?
It's one of the things we definitely have on the roadmap, also to serve some of these other use cases that I mentioned for other companies. But we're still in early days. I wouldn't really be able to give you a timeline. But happy to share more information when we're there.
Okay, thanks.
Okay, thank you very much again.